Welcome to the world of taxes, where numbers and paperwork collide to create a system that can seem daunting and confusing. But don't let that fool you. Understanding taxes is not only crucial for staying compliant with the law, but it's also an opportunity to keep more of your hard-earned money in your pocket. In our last video, we got through the basics of taxes. In this video, we're going to focus on the mistakes you definitely want to avoid when it comes to taxes. We'll go over the different tax forms and what they're for, so you know exactly which forms you need to fill out and why. By the end of this video, you'll have a solid understanding of how to steer clear of any tax blunders. Tax season can be overwhelming, especially for those who are new to filing taxes. Here are some common tax mistakes you should avoid. Not reporting all income. Be sure to report all income, including money from part-time jobs, freelance work, and any other sources. Remember, per law, your employer has submitted your W-2 to IRS. By sending the W-2 form to the IRS, employers are providing the government with a record of an employee's taxable earnings, which is essential for the calculation of an individual's federal and state tax liability. Incorrectly claiming dependents. Only dependents who meet certain criteria can be claimed on your tax return. Make sure you understand who can be claimed as a dependent before claiming someone. Claiming false deductions or credits. Don't inflate or falsify deductions or credits in an attempt to lower your tax bill. This is illegal and can result in significant penalties and fines. Forgetting to sign and date your tax return. A tax return that isn't signed and dated won't be processed and can delay your refund. Not keeping records. Be sure to keep receipts, bank statements, and other records that support your tax return in case the IRS asks for proof. Filing an incorrect tax return. Make sure you're using the correct tax form for your filing status and income. If you're not sure, consult with a tax professional or use tax preparation software. Failing to pay estimated taxes. If you're self-employed or have other income that isn't subject to withholding, you may need to make estimated tax payments during the year to avoid underpayment penalties. Failing to file a tax return. Even if you don't owe taxes, you still need to file a tax return if you have income above a certain threshold. Let's review common tax forms. W-4 form is a form you'll fill out when you start a new job. It tells your employer how much federal income tax to withhold from your paychecks. Yes, Uncle Sam has the first dips to your earnings before it even lands in your pocket. The amount of tax withheld is based on your filing status, the number of allowances you claim, and any additional amounts you request to be withheld. If you don't fill out a W-4 form, your employer will withhold taxes based on the single filing status with no allowances. Why fill W-4? If too little tax is withheld from your paychecks throughout the year, you may owe a significant amount of tax when you file your return. Filling out a W-4 form correctly helps you avoid underwithholding, so that you don't end up with a large tax bill at the end of the year. On the other hand, if too much tax is withheld from your paychecks, you may be giving the government an interest-free loan. By claiming the right number of allowances on your W-4 form, you can maximize your take-home pay and keep more of your hard-earned money in your pocket. Your W-4 form should reflect your personal and financial situation, such as your marital status, number of dependents, and other sources of income. By updating your W-4 form as your situation changes, you can ensure that the right amount of tax is withheld from your paychecks. If you owe a significant amount of tax when you file your return and you haven't had enough tax withheld from your paycheck, you may be subject to underpayment penalties. By filling out your W-4 form accurately, you can avoid underpayment penalties and ensure that you are meeting your tax obligations throughout the year. W-2 form is a form that your employer will provide you with at the end of each year. It shows how much money you earned during the year and how much was withheld for federal, state, and local taxes, as well as Social Security and Medicare taxes. You'll use the information on your W-2 form to prepare your tax return and calculate your tax liability. Your employer sends the same W-2 to IRS, so IRS knows what you earned before you even file your taxes. When it comes to tax time, one of the first things you need to know is which tax form to use. There are several tax forms to choose from, and the form you use will depend on your income, filing status, and other factors. The Internal Revenue Service, IRS, has a variety of forms because the U.S. tax code is complex and there are many different types of income and expenses that taxpayers can report. Each form is designed to collect specific information related to a particular type of income, expense, or tax credit. Form 1040 is the basic tax form that most individuals use to file their income tax return. This form collects information about a taxpayer's income, deductions, and tax liability. If you received income from sources other than your employer, such as freelance work or investment income, you'll receive a 1099 form showing how much you earned. IRS gets the same 1099 form from your income source. The IRS matches nearly all 1099s and W-2 forms against your Form 1040 tax returns or other tax forms. If they don't match, the IRS may tell you that you owe more money. If you're a student, you may receive a form from university showing the amount of tuition and fees you paid during the year. If you have a health savings account, you'll use separate form to report contributions and distributions from your account. If you have a mortgage on your home, you will receive a form from your mortgage lender showing how much mortgage interest you paid during the year. If you received interest income from a bank account or investment, you'll receive a form from your bank showing how much interest you earned. If you received dividends from an investment, you'll receive a form from your broker showing how much dividend income you received. If you received a distribution from a retirement account, you'll receive a form from your retirement account company showing how much you received and any taxes withheld. If you paid for childcare expenses during the year, you may be eligible for a tax credit. You'll use a separate form to report these expenses and calculate the credit. If you made a non-cash charitable contribution, such as clothing or household items, you'll use a separate form to report the contribution and calculate any deductions you may be able to take. It's important to be aware of the forms you need to file as part of your tax return and to complete them accurately and on time. Overall, the IRS has many different forms and documents to help taxpayers comply with the U.S. tax code and accurately report their income, expenses, and taxes owed. If you're unsure about a form or need help completing it, you can consult with a tax professional, use tax preparation software, or visit irs.gov website. Now comes the final part of actually filing taxes. The tax filing deadline is the date by which you must file your tax return with the IRS. For most people, the tax filing deadline is April 15th of each year. This means that if you haven't filed your tax return by that date, you could be subject to penalties and interest on any taxes you owe. However, if you're unable to file your tax return by the deadline, you can request an extension of time to file. An extension gives you an additional 6 months to file your tax return, but it does not give you an extension of time to pay any taxes you owe. It's important to remember that even if you request an extension, you should still estimate and pay any taxes you owe by the April 15th deadline. If you don't, you may be subject to penalties and interest on the unpaid taxes. Finally, if you're a U.S. citizen or resident living abroad, you may be eligible for a different tax filing deadline. In this case, you may have until June 15th to file your tax return, but you'll still need to pay any taxes you owe by the April 15th deadline. You can choose to file your taxes electronically, on paper, or with the help of a professional tax advisor. Thank you for watching the video, and I hope you had an amazing time watching it. Don't miss out on any of the future videos. Press the like button, subscribe to my channel, and hit the notification bell to stay updated on all of the latest content. Make sure to share it with your friends and family so they too can join in on the fun and learning. Leave a comment below and let me know what you liked about this video and what you'd like to know more about. Your feedback will help create content that is relevant and interesting to you.